and we'll kind of just kick this off. So, which one of y'all want to go first? We'll get rolling here.
I could start it off.
All right, cool. Let me see. How do I?
Could you either make me a co-host or allow me to share the screen real quick?
Yeah. How do I? Let's see. Make host. Is there a way to make him a co-host without taking me off the host? Let's see. I'm still learning this shit, man. Yeah, we're just gonna do this.
Scroll up on top and click the corner of his
Yeah.
And see if it makes you see if it allows you to add him as co-host.
It just says make host. Here's what I'm gonna do. I'm just gonna enable screen share here. It worked pretty well last time. If anybody messes with our screen, I'm just gonna boot them out of this call. So Stock Sniper, go ahead, man. You're good to go.
Awesome.
Appreciate you, man.
You guys see my screen all right?
Oh yeah.
All right. So before I even say anything, I want to say a special thanks to Alan for putting this together. He's been doing this every Thursday, and there's lots of quality information in here. If you guys aren't already, be sure to give him a quick follow. But I'm going to go ahead and dive into it right here. So one thing about my strategy is it's very short paced. It's very quick. I like to watch 1 minute candles, as you can see. Now, to see a particular example right here, I'm just scrolling through and looking at Tesla earlier today. And I'm going to go ahead and do it right here with you guys, what I exactly chart and how I find what I'm seeing. But first, I like to come here and I like to find the horizontal lines. And I like to, let's say, for instance, we're trading right now and it is about 952 or 947. Actually, we'll say it's right here, for instance. I like to chart where I find the high and I like to chart the low of the last 10 minutes. So I would be having 2 lines right here. I know the bottom one's off a little bit, not to scale. And basically what I'm looking to do is I'm trying to find a range inside of here. Like right here, we could see this is about 50% in the range between the high and the low of the last 10 minutes. Are you guys able to see my mouse?
Yeah.
Awesome. So right here where you can see that it's about 50%. What I ultimately like to do is I like to try to find it in about 30% range on the call strategy and about 70% range for the put strategy. Now, an example, I would add calls on a candle around here. I would like to see a bullish trend forming on the 1 minute with this range as well. And I also like to check down here. You could see my volume bars, and I like to see that there's consistent volume or relatively consistent volume. Obviously, some minutes will be more volatile than others, but I'm just looking to avoid some choppy volume like we could find around like here. I would try to avoid these kind of guys. But ultimately, I like to add this when I can find that ideal range, the volume, and the trend is going with me. And I will like to add those right there. The reason why I like to add it in this 30% range approximately is because we can still have a formidable gain without breaking a new high of the last 10 minutes. Now, this can make scalping, you could say this can make scalping relatively complicated in this perspective, but it's actually pretty simple when we're just looking at the sticks. And normally once I get closer towards here, before or sometimes when I am breaking that high of the last 10 minutes, I'm going to want to scale out half of my contracts. And the reason for this is because I like to secure my win. And once I scale out half of these contracts, I'm setting my stop for the rest of these contracts a little closer to my break-even point. Depending on the premiums, it could be above or a little bit below, but I want to ensure that I have a net win on the overall trade. And this lets me trade this with a lot less risk. And ideally, once I can go farther up here, that's normally where I like to cut half my contracts again, or 25% of my contracts as an example. And the reason for this is when we are up here, there's a greater chance of the stock hitting that 50% mark than of the 25% mark. As we are going farther up, you want to leave less money on the table. But however, you kind of want to, I personally like to capitalize on the full move or try to get as much of it as I can. And so that's why I like to let them run. And eventually I have 5 different scaling points that I like to call that. But an example of this, like what we're seeing today, is Tesla on that upside, what we're seeing this morning. But once I get farther up, I like to scale at one other point where I call it the open runner phase. Now, the open runner phase, if these contracts that were remaining went to 0, and I mean 1 cent, let's say, I would end up having a net loss on the trade in the open runner phase. Once I get to the point above that, I like to call that the free runner phase. And when I'm in the free runner phase, the only difference really is just that if the contracts went to a net zero or net 1 cent for a contract, I would end up having a net win still on the trade. The whole objective of my trading style, in order to catch some of the crazier gains that I have caught, is just lowering the risk as we get there gradually. And once I can get that half scale, we can watch this a little bit more comfortably. And that's ultimately that target right there for risk management. I'm a little bit all over the place. If anybody has any questions about anything, or if I'm going a little too quick, feel free to drop it in the chat. I'll be taking a quick look in there in 1 second. But that's mainly just what I'm looking for on my ads and how I'm scaling them. Taking one quick look real quick in the chat and see what questions people may have.
I think we're okay right now, Snipa.
Awesome. So yeah, so that's basically my general strategy when I'm looking for that. I often do like to take a trade right at 9:30. And when I'm taking this trade at 9:30, this is a lotto size trade. The reason for this is because I don't want to put myself in too much of a hole if this ends up becoming a loss. And the 9:30 candles can be some of the most volatile minutes of the day. As we can see right here, 9:31 and 9:32, we don't see another volume bar that's anywhere near there pretty much for the rest of the day. So the reason why I like to hit those is just because if we can catch that move based off anticipating buying or selling volume right at the bell, we can get pretty big gain, like I was saying there. I'm thinking about what else I should cover here. I'm a little all over the place at the moment, but
Someone asked you, do you base off pre-market levels?
that's a very good question. So I do like to look at the pre-market, and I'm looking to what the high and the low of the pre-market is. And I also like to look at the trend of the pre-market. And another thing that I find more important for these first candles of the day is just looking at the catalysts. Now, if we have a particular reason why people would buy this stock on this day or why they would sell this stock on this day, that can definitely influence my opinion of what I'm going to do right at 9:30. Now, oftentimes examples of some of these catalysts, like we could see Microsoft adjusting guidance last week. That was one I liked, the downside right there. I often like to trade Apple right at open because it does have, in my opinion, one of the smoother option chains compared towards SPY. But overall, that's pretty much my opening bell strategy right there. Another strategy, like I'll look for another charting example for you guys right here, but I'm going to look for an example towards the downside. Let's just pretend if we're somewhere around here, hypothetically. I'm going to go ahead and just draw another line. So if that was our high for the last 10 minutes, this would be our low for the last 10 minutes right here. So an example of where I would like to add puts when we're zooming in is I would like to add puts somewhere around here when we're about in that 35 to 30% range. And obviously in this picture right here, we could see it worked out pretty well. And this is not really to scale, but pretty much vice versa towards the call strategy. I like to try to get scale half of my contracts near or at that break on the high low of the last 10 minutes. Just in the event that we can bounce off of those levels, which we notice, especially when we're looking at the 1 minute, we see these micro levels that we sometimes won't see on the 5. And we can see that the more times the stock actually tests that level, the stronger that level is. And I really think that applies towards all time frames of charts. But on the 1, we can kind of see these little micro levels. And ultimately with my trading strategy, I like to add, and I like to be scaled within 5 minutes of my ad, which sounds a little crazy, but when we're looking at 1 minute, we're basically looking at 5 candles. And we could see pretty much looking throughout the day, there's a pretty relative move with 5 of these candles just about at every point. And we're also just looking at Tesla today, just for this example, but that's pretty much overall the downside strategy right there. It's just vice versa with the call strategy, but towards the downside. I'm seeing somebody say also scanners, high ATR. One thing I do like to do, I don't really do this in the pre-market per se. I like to do this the night before, but I like to scroll through unusual whales. And I like to see if I can find some unusual options. I like to look at the call versus put premiums And I also like to look at the call versus put volume. Now, if I can see a serious discrepancy in either side, for instance, like 65 to 35, that can often influence my opinion or help me form this little sentiment coming into the next day. I often do also look for some pretty high volume tickers and strikes on unusual whales. And if I do come across those, that will definitely also help catch my eye. Yeah, I do also, me as well, I do like to filter to out of the money onlys. And I don't really like to look at too far out of the money. I look at pretty much the next 4 strikes. It depends on which ticker I'm playing though. But that's pretty much my trading strategy in a nutshell right there. If anybody has any questions, feel free to drop them in the chat and I'll be more than happy to answer them.
Yeah, Sniper, what I got a question for you. So just to kind of expand on this a little bit, what is your exit plan and how do you really focus on candle structure? Do you focus on just levels? Is there anything that would make you doubt the position you're in besides, just this micro level you're talking about?
Well, yes. Not only do I look for these micro levels, I'll look for an example of one of these micro levels that I find right here for you. But I also do like to trade off of psych levels quite a lot because I can't stress this enough. And I'm sure those of you who have listened to me a decent amount have heard me say many times, stocks are just perceptions of value. There's nothing tangible here. We're just buying perceptions of value and selling them. And based off of different perceptions, like if we're seeing Apple at 150 versus 148, just looking towards the eye, it can look a lot more attractive to buy sometimes with different levels right there. I do think that psych levels have a major play in the market, especially with some levels when we're seeing SPY over or under 400. That can also influence a lot of opinions right there.
Fantastic.
So an example, it's not a perfect level, but when we see right here, this is pretty much like one of my textbook ads right here. But if I'm looking at this line right here where we see 749.16, now it's not perfectly to scale right here. We could see it's a couple cents off, but we could see that it's wicked up 3 times now here. Now, if I'm noticing that trend where it's 3 times, that's quite a lot of tests on that level, especially if we're seeing in the last 10 minutes. So we're seeing some pretty strong resistance right there at 749.16. Now, this is like a textbook example of where I would like to add puts. We could see that it did end up flushing right after, but I do look for these multiple tests on these 1 minute levels over the last 10 minutes. Yes, I am.
Fantastic.
And I do have the whale in my Twitter pic. I'm sorry to cut you off there, man.
Oh, you're good. Yeah, can you tell us a little bit about where people can find more of your education? Maybe where they can dig into some of your stuff. I know we're probably bringing in people from all over the place. So can you just let them know where to find you if they want to ask more questions later?
Yeah, for sure. Most of my resources are on my Twitter. It's stock Snipa, but you will find my resources also inside of the Kane Capital Discord under the additional resources tab. I do like to post a lot of threads in there. It's pretty much the same content, but it's in just a much more organized structure inside of the Discord, in my opinion. That's pretty much where you'd find my resources. Somebody asked, your MA9, why do you choose that? Well, I do like to use the MA9 because I personally think that on SPY specifically, can you guys see that I switched that tab, or is it just showing you the Tesla still?
You're on SPY right now.
Awesome. So right here, like on SPY, I personally noticed on the crossovers on this, we can see quite a lot of algorithms to this specific 9MA. So this is one that I do like to watch, and I do look for the algorithms around this 9. And when we see that it's trading significantly off of this, generally we can tell that it is like a bearish trend or a bullish trend sometimes when we're seeing this farther off. We can see that overall for a majority of today, we were pretty much under the 9. With occasional pop-ups right here, we could see, but that's just generally one thing I like to find as helping find trends.
So Sniper, how would you recommend somebody brand new trading a strategy like this? Do you recommend this for beginners? Do you think that this is a little bit more advanced? What's your level of skill and your level of conviction involved here? As well as how much screen time do you really think they should have before they start trading like this?
Well, to be honest, different things will always work for different traders. So
Sure.
I'm sure that there's traders that absolutely hate my trading style. And I know that there's traders that absolutely love how I trade. So it's really a little subjective when it comes towards experience. I personally started with the 5-minute candles, and eventually I switched over to the 1-minute candles. The 1-minute candles can be, for newer traders, it can be a little emotional, especially if you don't have your emotions under control. But overall, I'd say that the 5-minute candle is it's a lot less stressful in general, but I personally like the ones because of those micro levels. I've been trading for about 4 years now. I would say about 1 year in, I made the switch to the 1-minute.
Fantastic.
Our Discord is actually free to join. There's lots of content and rooms. We do actually also have a paid room as well with most of our alerts.
Yeah, there's a reason why they call this guy a robot. It's not a joke. I mean, I've seen this guy get in and out of a trade 20, 30+% in less than 30 seconds. So this guy is the real deal. But trading on the 1-minute, has been known to be very difficult for newer traders. And it is very high emotions unless you have a stoic, very calm mentality about your trading. You cannot be emotional when you're trading on a lower time frame. That's one thing I've learned over the years.
I agree.
And thank you, Stock Sniper. I really appreciate it, man. That was super educational. Y'all can find him on Twitter. He's also in the King Capital Discord. Yeah, it's not realistic for most. That's what somebody else said. But thanks for coming on, man. That was really awesome. Appreciate it.
Thanks for having me on.
Absolutely, dude. Feel free to stick around. We got Mo Mamba coming up. We also got Ryan Bentley, who's currently in the middle of a dead spot in Arkansas. Is RPS Trader on here? I don't see your name. I don't know. Maybe you can rename yourself or let me know who you are in here. We got RPS Trader. I also invited Tiger Trading in from Bentley's Discord. The guy's got a massive amount of education. It's a little bit complicated for newer people. And that's who we're really trying to talk to right here. The main reason why I'm asking the questions I'm asking, guys, is because some of y'all might have had a lot of experience. You noticed that I posted a poll in the beginning of this call, and 57% of y'all have been trading for 1 to 3 years. That tells me that you probably just got started doing options, less than that. So we're really trying to help everybody. And a lot of people, a lot of experienced traders don't worry about trading on such a short time frame. It's pretty gnarly, honestly. It's kind of micromanaging your trades. So Mamba, you want to give us a shout? Maybe talk to us a little bit about your specialty, a little bit how long you've been trading, and maybe even go over some setups, man. Like, because I know you do a lot of levels, a lot of TA. This guy is the GOAT. So y'all pay attention because he's going to learn you something real quick.
Appreciate you. Thanks for having me. So I guess we do have some experience, well, most experienced traders in this room at the moment in regards to the guests attending. Here, let me share my screen. For those that are, did that pull up?
Yeah, you're good.
Okay, so for those that are new in trading, when I first started a while back, but I was never on Twitter. There's no FinTwit. I didn't have, I wasn't around FinTwit. I wasn't even using any education on YouTube or the internet. I just heard a friend made 7K in 1 month. I said, why not? Let me try. So I threw in some money. We were trading some gold ETFs. Don't know if some of you guys came across those, JNUG, JDST, Nugget. And as most traders, your first few trades or your first month, you're profitable. And then after that, I'm blowing account after account after account. And then I just, stayed away from trading for a minute, focused on school. And then I was, in and out of the trading community. I would jump in, learn a little bit, come out, take some trades, and then, step away for a while, finish school. And then I think about 2 years ago, I went, about 3 years ago. Yeah, I went serious with it. and put in the commitment and the time to learn. So I was learning a lot off Twitter and a lot of education on YouTube. And one thing to let you guys know, there's no right or wrong, right? So when it comes to your EMAs, your oscillators, whatever you're using, there's no right or wrong. I've like went through a whole bunch of stuff, and it just comes down to what works for you, right? What are you comfortable with? So I've had the 21 EMA, I've had the 50 EMA, I've had a whole bunch of stuff on my thing, the MACD, the RSI. I've tried tons of stuff, but at the end, what worked for me was simple, was just the 9 EMA, right? For day trading, that is, was just the 9. Recently, I just started adding the 30 EMA. It's always good to keep an open mind and continue learning, no matter how experienced you are or how successful you are, it's good to always keep an open mind and continue learning, especially in the trading community, because you will hit that, you will hit a time where your strategy isn't working maybe for the week or something. Try to alter it, and better to have some backup strategies as well, right? So started taking it serious about 3 years ago, mainly swinging at first. The MACD down here, use it for swinging. I do not use it for day trading. Not that I have anything against it for day trading or saying that it's not supposed to be used for day trading, but I usually use it for swinging. Usually higher time frames on the daily time frame over here. So this is trading view, same as Snipa here. Let me see. So yeah, I use the MACD just to give me any divergence, right? Any bullish or bearish divergence that's going on with the price action. But more goes into it, right? I love, and I would like, if there's one thing I'd mandate on anyone to learn for sure and to have down, is being able to line up your support and resistance. I mean, I don't know how anyone could not trade off of, or could trade without lining up your key levels, right? Your key support and resistance, because when you're lining up your key levels, that's your entry, right? And then that's your stop loss. And then afterwards, you want your targets, right? So where are your targets? Your targets are your next key levels, right? Whether it's your next support or your next resistance. For day trading, I know probably a lot of you might day trade in here. So day trading, let me see, I don't think I took a day trade today. I had some swings from yesterday that paid off today. Don't think I took a day trade, but let's go. I guess let's just stick on GM right here, for example. This was something I was going to take a short on, but I had to step out of the trading room. I had a family thing to deal with. So what I did was I noticed, this was we opened up over here at this level, and then we came up and tested this, right? So I automatically, and then we dropped, right? So I automatically lined this up here. So that's a resistance level right there. We opened up, looks like we tested a little breakout above the level, but came down and closed, opened up below, and then dropped. Eventually, later on in the day, we came back and tested it. And again, we just dropped. So this automatically becomes a level. We came back up here and tested this level again. And I was going to grab it somewhere around here. I think one of these candles over here, I was going to grab puts, but I noticed also on the indices, I always have the indices up, right? So this is how my screen looks when I'm trading, right? I have SPY here on the left, or the Qs. And then I'll have whatever other ticker I'm looking at, but I'm on my laptop right now, so it's kind of condensed. I have a larger screen, so it looks a lot better. But I'll have my, my indices on the left, and then whatever I'm looking at here. But what I noticed on SPY, and I threw it out on Twitter, that I noticed a falling wedge. So a falling wedge is bullish, right? So I noticed a falling wedge when we came about, I think somewhere over here, we were making lower highs and higher lows. Lower lows and lower highs. So I noticed we have a falling wedge going on, and a falling wedge is bullish, right? So I expected a breakout, which eventually did happen. Wasn't around for this. So what I ended up doing was I did not want to take puts and not be able to watch my position. So I just avoided it, right? So I mean, eventually would have paid off. Who knew this would happen? But the falling wedge did play out. It did break out. We rejected a level and then we dropped, right? So it's good to have your patterns. I'm not that knowledgeable with candlestick patterns. I know a few here and there. I love patterns, but my main thing is key support and key resistance. So I'm always lining up my levels. Some people ask me, when do you ever just remove the levels or delete them, right? Usually I just keep them if they're still respected, if they continue to be respected, why remove them, right? So I just continue to leave them. So some of these levels might have been from way before, but as you see, a lot of these levels are being respected, right? So I tend to just keep them. And then coming over here, when I do take a trade, man, I wish I had an example of a day trade I took. I don't even remember day trades I took yesterday, man. So much going on. What did I take yesterday? What did I take?
That Rivian short.
Rivian short, yeah, but that was not a good example. I took a Rivian short, yeah, but that wasn't it. But usually what I do when I take trades, for example, let's just go to Microsoft, see if that's a good one. Let me bring the screen a little bigger so you guys can have a better look at it. Okay, so what I do at times, so this is your this was today's trading session over here. Okay, all of this right here was today's trading session. So if Microsoft is coming up here, this was in the morning, right? Look at this here. Let me remove this. This was a resistance earlier, 5 minutes. So what I would do even before Microsoft comes up here is I'll line up a level, right? I'll just line up a level right there, see if it ends up testing, rejecting, coming back down, falling through, closing below. I'll risk puts, right? You have a better risk reward. My trades are usually, I don't want to say stress-free, but it's not, I'm not trading on the 1 minute, I'm trading on the 5 minute. I never go down to the 1 minute. I never go below the 5. But what I do on top of my levels is I'll jump to higher time frames. So one thing I like is the more conviction you have entering a trade, the likelier trade is going to work out, right? The more confidence I'm going to have in that trade, right? So what I do sometimes is when I do see a level, let's say a previous day level, I usually jump on the 30 minute. I go 30 minute, 5, 30, and then 1 hour, right? And then I see if anything else is there that supports this resistance, right? I'll look back and see if there's anything. Usually a lot of times it does. I think Pfizer is actually a good one. Let me see if Pfizer is a good one. I trade this stock off. So yeah, so check this out. This was a 30 minute, let me see. Man, the screen is small. Let me see. Okay, you see this level right here, right about there. If I can remember what day was this made. So this is gonna be a little tough to go look at. But what I like to do is, I think you guys get it though. But when I do see a level intraday or the previous day, I'll zoom out to the 30 minutes. So one thing I go by is the higher the time frame, the stronger your support and resistance is, right? So your 5 minute is not as strong as your daily, right? So if you line up a daily support versus your 5 minute support, your daily is a lot stronger than your 5 minute. You're likely to bounce off of your daily support more than your 5. Not that you won't bounce on your 5 minute, but this is going to hold a lot better than your 5 minute. So the higher the time frame, the stronger the support and resistance is. That's why I add further conviction by looking at higher time frames when I'm looking to enter a trade. When I'm looking to enter short, if I have resistance at a specific level, I'll go out to a higher time frame and see if we have anything else on a higher time frame that supports this resistance. And I'll look to take the trade, right? And then some people, I get a lot of DMs about, hey Mo, my TA's on point, but man, I panic sell and I get out, and then the trade works out, goes in my favor. And the thing is yeah, your TA works out, but I think you have to master your emotions, right? I think it's an emotional game too. It's a psychological game. I think if you're able to master that for sure, and then you have TA along with it, you'll be a great trader. Definitely emotions over TA. You can have all the TA in the world, right? But if you can't, but if you're panic selling and your TA is working out, then what's it going to benefit you, right? So I don't want to say go into trading, right, or go at the bell, with the mindset of like, okay, I'm going to blow my account, it's fine, it's okay. No, but understand that it's okay to lose money. You're going to lose money. Accept the fact that you will lose money and you will lose a trade, right? Don't always go within the mindset, man, I got to hit this daily goal. I have to. If it doesn't, you're making it to yourself as if it's the end of the world, and it's not. So try to go in with that mindset where you are going to lose a trade, right? No one's perfect. The best of the best, they'll lose trades. They'll go on losing streaks, right? So it happens. You got to go in with that mindset of, I will lose a trade and it's okay, right? But as long as you're following your risk management, you're following your TA to the T, you'll be fine. You'll make it in the long run. You'll have your ups and downs, but you want that trend. You want that upward trend in the long run. So
Hey Mo,
it's really
real quick
yeah.
on that. What do you think a reasonable success rate is for a good trader? I want to give these people some hope.
And like in
I mean, just overall, you think 50%, 60%, 80, 90? What do you think is reasonable for a decent trader?
Well, I don't like to go by the success rate because some people could be winning, let's say, 80% of their trades, right? But if they're taking 30-40% losses and they're making 10% wins, that's not going to benefit you. So so you could throw you could throw that out the window. So it's really, you just have to stick by your TA, understand, minimize your losses, maximize your wins, and don't fall for the 300%, the 400% you see on Twitter, guys. Don't fall for that. Don't the 100%, the 200, the 300. That doesn't come around a lot. And if you have that mindset, you're gonna end up blowing your account. I can guarantee you that. So if you're making 20-30% on your trades, trading options, that's pretty good. That's pretty good. And if you see your streak a lot better, taking 20-30%, then why not go with it? Why are you holding for 100%? Why are you going to flex on Twitter? It's not going to benefit you at the end of the day. So the win rate, you could really start, lose 40-50%, on your trades and win that 10%. So you can throw that out the window. But it's more, try to keep so my stop loss, for example, would be, let's say, I'm going to take this trade right here, right? PFE came up here, rejected, came up here, nearly hit, made a lower high, and it's coming back again, right? I wouldn't really have taken this. I would like a test, even if we wick through, come back down and close. I'd prefer that. But let's say if I were to take it, right? What I would do is I would, my stop loss would be if you break and hold this level and then confirm support, right? Because you could break and hold this level, next candle fall through, close down below your level. That's bearish to me. I have a perfect example of that actually with the Qs today. And but my stop loss would be, this level break and hold. I'm not going to live on hopium and be like, okay, this thing is going to come back down eventually here. Let me add up here. Let me add up here. No, you continue to add, you'll end up, losing a lot more than you would have initially lost. Likely to, that is. Let me show you the Qs real quick. Qs today, there was a level, what was it? Okay, so you see this level over here, this 308.50 level. This was a level the Qs was struggling to get above, and it faked out. I'm pretty sure a lot of people got faked out right here on this one. So what happened was this was the opening today, came up here, rejected. You see how we rejected right here, and nearly tested it there. But this is a level it's struggling to get above and hold, right? So we came back here in the morning. We came up in the morning, tested it, fell through. Anyways, bounced off of a level, came back up later on. Not too long after that, again, wicked up. This is why I wait for candle closes, guys. A lot of people might take this, wake up, okay, it's breaking out, I'm gonna get in. Yeah, it might work for you, but I think, in the long run, it won't. That's just my experience. I wait for candle closes, 5-minute candle closes. So what I saw this drop, close below, next candle, check this out. So what I like to do is I wait for an A++ setup, right? You can take this, right? So you can take this candle close, breakout, candle close above the level. Finally, we got over this level, candle close. I'll take that risk reward, right? That's a better risk reward. You waited for the candle close. Where's your stop loss now? Your stop loss is if we fall back through this level and close, right? Then that's bearish. So what happened is this candle closed. I never take it. I wanted to see if the next candle will come back, test this, and come back up and close, right? That'll give me a greater risk reward because you came down, confirmed support, you tested this level to fall back through and you failed, and it bought back up, closed above. I'll take the trade, right? Again, my stop loss, same thing. Next candle comes, falls through, closes, I'm out. I won't, I won't continue to hold to live on hopium. So what ended up happening here, people probably got caught here. It happens, it's fine. That's still, a good risk reward. Came down close, this should be your exit. That's it. This candle should be your exit. this was bearish. I called it on, I was on Live Voice, showing the members this trade, and this was bearish to me right here. And then I got my little crossover going on, but that's just something else. But once this came down and closed, I didn't like this, especially after we struggled multiple times to climb back above, close, and then fell right back through. That was very bearish to me. And as you see what happened, we just fell through afterwards. Any question? I can't see the questions. Let me see if I can pull that up.
Somebody's asking, what indicator do you use, Mel?
What indicator do I use? So I don't use, I told you the oscillator I use down here is the MACD. I use that for swings though. And I use the 9 and 30. But that's it. And then my support and then my key levels, my support and resistance levels.
Do you look at volume at all? Do you have volume pulled up in your chart?
No, see, that's the thing. People are probably going to bash me on that, but no, I used to have volume on. I don't. People probably think I'm weird about that, but I just don't have it on. I've just experienced that. I missed out on trades sometimes, or I probably got into trades that failed me based off of, I got faked out by volume, let's say. But I just found it better for me. Not that I'm against volume or it's wrong or anything, but I just found that I'm a better trader without the volume being on there. I just like to go about my key levels, my TA, and that's it. But yeah, again, nothing against volume. People are probably going to get on me about that, but yeah, I don't use volume now.
Can you tell us what makes a good level? I mean, it's easy to see it visually, but what really makes a good level as far as having a strong level that you can rely on?
So three things. First one, I tell people, this one's an easy one. Gap fills are automatically a level. So gap fills, guys, when it gaps up, gaps down, I just line it up, right? So let this right here, this one, there's a gap over here. We gap down. This becomes a level for me. Gap fills usually, you fill the gap sometimes and then reverse. You can either scalp or it becomes, a higher win trade. But gaps, so if you're gapping up or vice versa, if you're gapping down, I line up that level. Another is multiple tests on a level. So once we fell through, came back up, tested again. So you're failing to get back above the level. Test it again. So this becomes what you're strengthening this level. This becomes a level that you're really struggling to get over. But the good thing is this becomes a strong resistance level. So once this forms into support, you're likely to get a nice upward move with price action. So multiple tests, I would say maybe at least like 2 tests. I'll line up a level. Gap fills, 2 tests, and there was one more. I remember I had like 3, and I'd go about it. It was like a 3-point rule thing. Forgot the last one, but it's multiple tests and gap fills. Consolidation. So this consolidation over here, you're consolidating above a level. You're not really coming, down, test, reject. You're not doing that. You're really just consolidating. CCJ was one. I was swinging this one. I was watching it today, and no, so this was within range. Actually, it wasn't really consolidating. So you're just bouncing within range. But if you see consolidation where you'll just see price action, just candle next to each other, just candles next to each other, right? You're not dropping test, drop test, drop test. You're not really having that zigzag, right? You're just seeing just candles next to each other, and then you finally get a drop. Consolidation for me, that becomes a level.
Man, this episode right here, guys, is just full of good information.
Yeah, so 3 points, just jot those down. Gap fills, at least 2 tests on a level, and then consolidation.
Awesome.
Yeah.
Now, me personally, I've gotten to a point in my trading where I like to keep it super simple. So my levels are literally always daily levels. I go off the daily chart for mine personally. And I call them my golden levels. I literally make them gold and bold on my chart. And for me personally, anytime a stock is running to a daily level and it's the first time it's approaching it, it will almost always get rejected. So I was just talking about this before everybody popped on here. And I was talking about this on live today. Me personally, I will run to a daily level, you know, on a nice trend, and I will take my profits as soon as it wicks on it, because almost always it will get rejected, and then you'll lose, especially if you're playing 0 days or weeklies. You'll lose anywhere from 10 to 30% off of a rejection. So it's important that I think that not enough people talk about it, is taking profits, be greedy, especially in the market we're in, when SPY is trading like a freaking penny stock, you know, ranging $12, $13 a day. And then sometimes it just chops for a week like we have been. It's important to take your profit. And I think Mo does a really wonderful job of that. Like he said, you don't have to have that 100% runner. And if you're holding 100% plus trade or even 50% plus trade, and you let that motherfucker go red, that is an entirely a psychological
Yeah,
mistake on your part.
big time.
You know what I mean?
Yeah.
So if the levels are really solid and you're going off the daily chart for them, I've personally noticed that I need to take profits when I have them, especially in the market we're in.
Yeah. One thing real quick. I spoke about gap fills. I love swinging. So when I do swing, I love swinging gap fill reversals. So what that means is when you do have a gap, you're looking for it to fill and then reverse, right? So we had this gap up here on CCJ. I took this yesterday, right? We took this trade yesterday. So we had this gap that never quite filled, right? So when we came back up here, I didn't see this honestly till yesterday, but Trend Watch put my eye on it. We filled it over here, came back down and closed. Next candle, the next day, sorry. So this is a daily time frame. We came back up and fell through again through that level. We couldn't hold that level, right? We couldn't hold that daily gap fill level, and we came back down and closed below it right away, triggering a swing entry for me. I grabbed puts on this yesterday. So this is a perfect example of a gap fill. I love playing gap fill reversals. Had a lot of success with them as well. And we took this yesterday. It dropped. I think we're up about 25-30% on this one. And then just to show you guys why I line up my key levels, and then I'll just set my targets, right? I'll set my targets. But when I do set my targets, whether it's day trading or swing trading, doesn't mean I'm not trimming or I'm not going to secure any profits until I hit this level, right? No, it doesn't mean that, because, you know, like I said, I'm up 20+%, nearly 30%. At the moment when we entered somewhere up here. Why am I not going to secure profits, right? I'll secure, you know, half my position, a quarter to half my position. Just depends on the price action, what's going on. That'll take into account how much I trim. But why not secure some? And then my stop loss would be my entry. You know, worst to come, I've made some profits on this, and then I'm out on the rest break even. But usually it continues, you know, to drop. It goes my way, and then I'll just continue to trim along the way. And then when I hit my first target, I'm usually out. I have a fourth of my position left and see if I can get anything more off of it.
Fantastic.
Yeah.
I'd like to share just a quick, since Mo's talking about this, I'd like to jump in real quick and share an example from today. I played a lot of small caps today. Small caps were really, really hot. Mo, if that's okay, I just want to take this for just a second.
Yeah,
just to give people an
absolutely.
example of what I'm talking about. So I played DBVT today, and I think this is a really cool trade to talk about. So one of the things about small caps is that I like to wait. I watch it on the 1 minute, and I have a screener pulled up online. And so let me just do this. I'll show you what I was seeing on the 1 minute, right? Seeing a ton of volume coming in, and it was consistent down here, and it was running. So I drew this wedge out for you guys. So you had this huge wick up that alerted me right away. And then I started watching the stock play out. And immediately when I see a momentum trade popping up on my screen, I'll immediately, like within seconds, hit the daily chart. And you'll see my chart looks like a freaking barcode, right? Like when you get to a point where you have a ton of daily levels, and I draw daily levels with golden lines, right? And I look at candle closes on either side of that line on the daily, right? historical moments of consolidation, support and resistance, and the more touches on either side of that line, the better the trade's going to be, the better the line, right? So you can go back in history as far as you want for this, but the further back you go, the stronger the level's going to be. So whenever I was in the middle of this trade, let me just go back to it. I mean, as you can see, this thing was a monster today. This is the daily chart. I mean, how you going to go from $1.60 to 320, 340, right? There was no way to know this was going to hit that high. I mean, you have to have an exit plan, right? So I'm watching this chart play out. Now I'm on the 5-minute here, just to give you an example to make it easier to see. But I had a level at 225, 238, 260, and look at that. You go on your 5-minute chart, I don't have to move it. It's right there. You see it. It consolidated across that line. It hesitated. It had a battering ram set up here. It had to test it 3 times before it broke. Here, the initial breakout, this is what I was waiting for. So I initially entered this trade off the break of this level here. I took profits here, and then I waited for the retest on that to turn it into support. And as soon as it did, I entered with size and I took my full position. Well, now I got another level right above it. And then I hit here, take my profits, let it swing down, confirm support, it doesn't drop below. And then next thing you know, we're off to the races. I took this trade to the second level here. This is my level that I exited in full at. And you can see why, because small caps tend to get rug pulled when they're parabolic. So whenever I saw this huge wick up, and then obviously it retraced, like I took all my profits off this first test of the level. I didn't want to play around with it. I'm not gambling in this market, right? Now, there was no way to know that this thing was going to continue to go from 260 to 343. I mean, that is a monster move. There was absolutely no way to know that. But the volume just really picked up. The reason why I got out in full there is because on the 1-minute chart, this volume is kind of dry. Every time I see the volume starting to die off on a momentum play, I'm out. I'm good. And so I've been doing this a lot lately. And whenever I rush to get to these daily levels, a ton of these small caps are coming off of falling wedges. Another one that I played yesterday for huge profits was HTCR. Same thing. I'll show you this one. So let's go back to the daily. You can see it was coming off this falling wedge and it broke out, right? Same exact thing he's talking about. Same exact pattern he even gave an example on, right? So on the intraday chart, I took this one for massive profits, like 60% on commons or something like that. But the momentum was just so parabolic. I mean, there was no way to know that it just didn't stop. I mean, there was no hesitation. Same exact setup you see here. You see this rising wedge popping on this stock, and you have no idea where it's going to stop. So I do some quick TA. I draw my patterns. I get these daily levels, and look how money these levels are. Money. See, that one just sliced right through. But 9 times out of 10, these daily levels will work. And sure enough, later on, if you look at the levels coming into today, perfect level here. Perfect level here. I mean, the harder the level on the daily, the better the level's going to be. Yeah, you do get wrecked fast on these momentum trades. You got to be careful, right? The small caps, I find these using TradingView screener. Let me just show you an example of that. Let's see if I can find one here. Oh, here we go. This one. So I'm on TradingView stock screener in the mornings in the pre-market. I recently found this to be my favorite screener. I just like it a lot. I'll sort it by pre-market volume. I'm up early every single day. And you'll notice that these will change throughout the day, right? DD had a ton of volume in the pre-market. IMPP. I played AUVI today for small caps. There's a lot of these trades that just absolutely murdered today. And it just so happens that one of them that ran huge, which one of our members, PBTS, let me see if I can find it.
Hey, your screen isn't up.
Oh, my bad. I'll find it for you. There you go. Is that better?
Mm-hmm.
All right, look, this thing ran 189% today. And one of our members, Keebla, he caught it at 8:40. That's 10 minutes after the bell. And it was at 40 cents, I think, 46 cents. And it ended up running like $1.50. I mean, this guy murdered that small cap trade. There was no way to know that it was going to go that high, but he caught the momentum, he caught the volume, and quickly we drew levels on it and we knew when to take profit. So it's really important that these levels are really, really solid. I guess that's what I'm saying. So anyway, Mo is actually the one that taught me how to draw levels, and I've kind of taken my own method to it since then. So I'm really happy with the fact that he taught me that. I didn't even use that shit whenever I was swing trading. I would look at TA patterns all day. I've been swing trading a long time, but let me tell you, when I started options trading in January at the beginning of Gain Capital Bootcamp, I started with $50,000 in this account. I lost 60% of my portfolio in 2 weeks. In 2 weeks after my first options trade, I lost 60% of my portfolio. And that's because I didn't know when to take profit. I didn't know when to exit. I didn't have a plan. I just saw these massive runs and I just let it go red, not thinking about it. Oh, there's no way it turns red. Yeah, they do. And if you don't have it ready to go and you don't have a plan for your exit, you will fail. I'm not even joking. You take somebody's alert and you don't know why you're taking it and you don't know when to exit. The levels tell you when to exit. That's my personal strategy, right? So this doesn't have to be that difficult. You can trade on patterns. You can trade on however you want to trade. You can trade on the 1 minute. Stock Sniper is a perfect example of that. Mobamba is a perfect example of a swing trader, right? He looks at the patterns. He looks at the daily, the MACD. He'll draw out harmonics for you. Like he knows exactly what he's doing, but you don't have to, is what I'm saying. Like it can be super simple, super basic, and you can be successful. But like they said, and I'd like to hear an idea of what Stock Typer thinks about this. And I'm going to ask both of y'all. What percentage of your portfolio do you typically put on one trade? Y'all can unmute. I'm trying. Ask to unmute. Ask to unmute. Okay, let's see here. I got you. All right, Mo, can you unmute? The hell? I'm trying, guys. It's not letting you? Okay, well, not sure why it's not working. The message pops up and then disappears. All right, Stock Sniper, you want to go first? Let's see. Try it now, Sniper. All right. Well, I don't know what's going on with that. Well, let me just try it one more time, and if it doesn't work, then it is what it is. All right, go ahead. All right, now you should be able to. Mo, you should be able to do it now. Okay. Well, does anybody have any questions at all? Yeah, I know the mute thing keeps. I made it to where you should be able to unmute yourself now.
Yeah, it looks like that's working at least here.
Yeah, Keebla just talked, so You
sure
should be
if
able to just you should be able to unmute yourself.
not sure if you want to cover Neo, but you made a good point about it not breaking through that golden level earlier today, and then it just consolidated.
God, that was my failure of the day. Do I really want to talk about it? Yeah, I guess I will. Okay.
I mean, I
do
wouldn't
that.
call it a failure.
I
mean,
mean,
you're gonna,
it wasn't a failure, but and to be
Yeah.
honest, it looks like it's going to pan out tomorrow. So, anybody that wants to talk can talk. If you have questions, whatever, just be respectful. We are recording this for everybody else to benefit from. Let's see. It seems like people want to talk about SPY. So, I guess I'll give my opinion on it. That's kind of a macro level conversation. My personal opinion is that CPI comes in a point or two underneath expectations and then we rip. I think that it'll dump in the morning and then we rip. That's my personal opinion. I don't think it's going to be all that bad. Phil asked, how do you not screw up with all those levels? Well, dude, the truth is that I leave these levels, these golden levels, stay on my chart. They don't ever come off. I leave these on here week after week after week. And if they're a good enough level, you want to see my SPY chart? Oh my God, you don't even know. Hang on a second. Look, it looks like a UPC code at a grocery store, right? Well, that's because I never delete levels. The blue levels are intraday. The golden levels are my daily levels. And you'll notice, man, like they hold up. I mean, they might be a few cents off every now and then, but they hold up. And that's because whenever I'm charting, I take an extraordinary amount of effort to make sure that I don't have to mess with these because these are historical points of psychological resistance or support. The stock market is simply a psychological game. And that's why Fibonacci ratios work. And that's why levels work, because human beings, and as well as the computer trading systems that you see, the HFT, high frequency traders, they all trade at certain points in the market. It doesn't really like change a whole lot. The only thing that will change and what's really important and trying to figure things out is momentum. So like, a lot of people use averages. Mr. Tremwatch talked about this last night. He made a great point. Averages are a trailing indicator. They use historical price actions to develop that line of psychology, right? So to be a good trader, you have to do things like Mo, which is I have to look at momentum. I have to look at different things that'll tell me where this thing's going and what point is it pivoting. And that's something that we can cover over time. I didn't want to get too far into it tonight. We've already been on here for about an hour. I really appreciate Stock Snipa and Mo for coming on. I think we're going to continue to do these videos. I really want to bring on more technical traders to talk about swing setups, to get a little bit more advanced with that over time. But this video in particular is a little bit more for new people. And when you're new, like I haven't messed with these levels in I don't know how long. Like they might be a little off, but my goodness, the 403.05 was butter. It broke it, retested, and broke down right at the end of the day. I mean, is there an indicator that has on TradingView that has levels already plotted? I don't know. I make the effort because I want to make money. I don't rely on anybody's little, indicator or their scripts. I don't rely on any of that. Because I'm not going to rely on somebody else's coding and user-defined script to make me money. And I'm not going to rely on it to tell me when to buy or sell because they could be wrong. And I can't tell you how many times I've seen people's, quote unquote indicators being wrong on TradingView or Webull or anything. You have to have a plan. So these levels are my plan. I take profits at the golden levels, right? And yes, I will have EMAs. I'll have EMAs pulled up on the chart and I'll use fibs intraday, but the fibs don't tell me when to exit or enter. My hard levels, I can't tell you how many times we've had a live call and I'm on call with the alumni or Zoom or whatever, and people are screaming out where the fibs are. And all I have to do is go to my chart and look, and I'm like, oh shit, that just so happens I have a level there. It happens every single day. I very rarely have to draw fibs because the levels are fibs. There's psychological points of pivot, continuation, resistance. It's important that we understand that, you know, the market is a complete psychological game. And if once we understand that this is not rocket science, that this is just people behaving the same way as they always have in history, right? That's the reason why that's a level, because in the past, they did the same freaking thing, you know, and that's where buyers or sellers will step in. It's really not rocket science. And I hope people can understand that. Stock Sniper's strategy is a little bit tougher for me personally. I've been trying to do it. And I've kind of mixed in some of his material into my personal training now that I trade on the 1 and the 5 minutes together. But you have to do what's right for you. Obviously, everybody that we've brought on these calls trades in a different way. And that's the whole point, is that I hope that people can see that there's no one right answer. And the main thing that we all have in common, the people that are profitable, like I just became full-time. The people that are profitable use risk management. They keep their profits and they don't put too much on the table at one time. You full port a play on somebody else's alert, I don't feel bad for you whenever you bankrupt yourself. I don't, because that's crazy. You should always be using a certain percentage, whether it be 1 or 5% of your portfolio. You know, you should have a max loss for the day, a goal to walk away from. Don't overtrade. If you're over trading, that's because you're probably still pretty young in the market and you feel like you're at a casino and you can't walk away. We do this all the time, every single day. We had alumni that start off in the morning and they make 20% of their portfolio and then they lose it all and then some. So I hope that these calls continue to help you guys. Thank you, Stock Snipers. Thank you, Mo. I really appreciate y'all coming on. I'm gonna go ahead and end it here, guys. We had a little over an hour. I hope y'all enjoyed it. I'll post it to YouTube for us to recap. I really hope that y'all continue to have the line mentality, guys. Just like the video we had in the beginning. We got to fall in love with the process. You got to get screen time. You got to really dig into this and learn it. You cannot win taking alerts. That will not work long term. So thanks, guys. I appreciate it again. I'm going to let y'all go. And now I'll get this uploaded later tonight, guys. Let's get you back in the black, all right? Appreciate it.